Good afternoon and welcome to our discussion on business combination and consolidation. In this session we'll just observe some transactions and try to prepare a consolidated financial statement. So in this example is given that A with these assets and liabilities and B with these assets and liabilities, and A acquires 90% of the shares of B at the market price of 60 and discharged through capital or through shares and bonds. So this information, before we prepare the consolidated balance sheet, we have to find the purchase consideration, goodwill and minority interest. So purchase consideration, as it's given here, A acquires 90% of the shares at a market price of 60. So purchase consideration is the total shares of B. Total shares of B is equal to by 5, and A's share is 90%, 0.90. Okay, A acquires 0.90, and at that market price, the market price of B's share, is 60. So PC is equal to 2,700 into, so 162,000 is the purchase consideration that A has to pay to B, or A has to give to B. But the purchase consideration will be used to calculate the goodwill. But before we calculate goodwill, let us find out the equity of B that is taken over by A. So equity can be calculated as assets minus the liabilities. But whenever there is a market value of the assets given, it's better to find the equity through the value of the assets minus the value of the liabilities. So the value of the asset is the market value of individual assets given here, okay, plus the cash. So that is the assets which are subject to the consolidation. So this is the assets that A will be taking over at this value. The market value of the liability is not given, so I'm going to take the book value of the liabilities, and so equity of B is 135 minus 21 is the total equity of B is 113,500. Of this, A share is 0.90, and B share, the minority interest is into 0.10 minority interest. So the liabilities, let me recap. So the assets are inventories, debtors, R&D and plant, and the cash which is given there. The liabilities are 10,000 and 11,000. So the equity of B is 113,500. So as a result, the equity acquired by A is 102,150, and the balance is a minority interest. Now we'll use this information to calculate the goodwill. So goodwill is equal to purchase consideration less equity acquired. So purchase consideration, we already calculated 162,000, and equity acquired we calculated here. Equity acquired is calculated here. So therefore goodwill is equal to goodwill is equal to goodwill is equal to 162 minus this is 59,850. 59,850 is the excess money paid by A to acquire B, because they're paying 162,000. 162,000 is the shares taken by A at the market price 60 is 162,000, and equity acquired is the 90% of, you can see that equity acquired is 90% of the total equity of B, and the total equity of B is 134,500 minus the liabilities, that is 10,000 and 11,000, so 113,500. Once I have the goodwill, purchase consideration, minority interest we calculated. Let me highlight this because these are the information that's required. Minority interest. So then we'll find discharge of purchase consideration. Discharge of purchase consideration, in this case the entire purchase consideration is being discharged, so PC is equal to 162,000 by shares 50%, 0.50, and by bonds is the balance 82. Okay, so the number of shares to be issued, so we will move up. So the number of shares to be issued, the market price of shares of A is equal to 45, so the number of shares to be issued is 1800. Okay, so the number of shares to be issued is 1800. And what to do with this 1800? So the number, this is number, so the capital is 1800 into 5, because the face value of the capital is 5, and share premium is 1800 into 40. Okay, so that is the way the discharge of purchase consideration happen here. So purchase consideration has been discharged through issue of shares and through issue of debentures. And issue of shares has been done at the market price of 45, so the number is 1,800, and the capital is multiplied by 5, and the balance is the share premium. So this information, purchase consideration, equity, minority interest, goodwill, and the corresponding effect of the discharge will be taken into account while preparing the consolidated balance sheet of B. Thank you very much.